Gare joins me now. We're live from the trading desk. I'm sure, Victor, your ears were really perked up listening to what Joseph Schachter had to say.
Yeah, they really were, Mike. Joseph and I stay very closely in touch, and if I could make one point here, and I want to get to it right away because this is the key thing, Drew and I really do think that the Canadian dollar is very much at risk to a breakdown in the oil price. I mean, here this past week we had the oil price, WTI, rally $4 from last week's lows, and Canada hardly budged. It didn't get much of a lift at all. If the oil price breaks down the way Joseph thinks it might, I really think we could see the Canadian dollar weaken dramatically, and I don't think there's a lot of upside risk, that the Canadian dollar is going to have a big rally. So that's kind of, Joseph really perked up my ears. I've been short of crude Canadian dollars here for the past several months, and now, actually, Mike, to go to that, we actually covered our short puts this week, and not at the lows. We owned puts on crude oil. We'd had a great run on that as the prices has rallied, as the WTI price fell. But puts have a time clock on them, and we were starting to run out of time on that, so we traded out of our puts. We've stayed short Canada, and we're definitely looking for spots to reestablish our short positions on WTI.
Well, just very quickly, Victor, what are you looking for to know when to reestablish?
Yeah, that's always the trick. Well, we've had a good rally here this week. Joseph gave, a couple of examples, but perhaps it was OPEC making noises that they're going to extend their cuts. There's been a lot of political turmoil in Venezuela as well. Whatever, we've had a bit of a bump up. If this bump up, runs out of steam, or maybe if prices get up to toward $52 and start to struggle, then we'd reestablish our short positions.
And again, just for the, let's say the more investee style as opposed to the pure trader, but, Joseph gave a couple of time frames, the end of the second quarter into the end of the year, depending on stuff, what was going on. Would you be more conservative and take, let's say a put means you're playing the market to go down. It has a time frame. Would you be more inclined, I guess you'd have to look at what the premiums are, to try and stretch it a little bit lower? Longer, I meant, not lower, longer.
Yeah, for sure, for more time. But when I mentioned this is our model account, we trade a model account, and we're probably much more conservative in our model account than we would be with our own trading. And so for that basis, we'll buy options. So when you buy an option, there's definitely a limit to what you could lose on it. So you give up something for that. We're trying to keep that model account relatively low volatility. There's, Joseph mentioned contangos. If we get this super supply of oil, we will see the forward prices of oil at a huge premium to nearbys. I like to trade those spreads. But the key thing here, I think, for our listeners is going to be you got to keep your eye on Canadian dollar here. If we see the WTI price weakens the way Joseph think it could, that could really be a drag on Canada.
Victor, my apologies. I'm only going to give you a minute to answer a deeper question. It's got to be very quick here. But the other thing we talked about was this interest rate differential. Yeah, you look at the U.S. going up. Man, I was comparing that to the European countries, like the government bonds going negative. I mean, my goodness, no wonder money comes to the States.
Yeah, just to make it really simple, I mean, in Germany, whether you're at the 2-year mark or the 10-year mark, you give up 2% a year to invest in government bonds there instead of being in government bonds in the United States. And that's with interest rates where they are, that's a real penalty, and that's one of the things that causes, it's like a magnet. It pulls market to America from the rest of the world where interest rates are a lot lower. All across Europe, with the exception of the UK, the major countries have got negative interest rates at least out to 2 years. So, America looks good just on an interest rate play, especially this week with all the Fed speakers coming out forecasting 2 or 3 more interest rate increases this year and then more to come next year.
Good stuff as always, Vic. Thanks for taking the time.
You bet, Mike.